After a period of QE-induced exuberance, prices of shares and bonds in the Eurozone have started to fall for the first time this year. To help me discuss whether this means that there is going to be more volatility in the markets and the effects that this will have on investors, I'm joined by Eric Verleyen, who is the Global CEO for SG Private Bank. Eric, thank you for joining me.
Thank you for inviting me.
So what has happened?
So as you mentioned, actually, we did have a month of underperformance on European assets. It followed actually a long period of outperformance. And as you mentioned also, we had a peak of volatility. So I just checked actually the figure of volatility this morning. And I found out that we had actually an increase of volatility from 12 to 14. I'm talking about the VIX volatility index here. And I've checked also what was the figure in January. In January, we had a peak at 25, which is far higher than what we are experiencing right now. I think investors have to actually remind that in the past, in 2011, we had reached some VIX peak at 40, and during the crisis of 2008, it was 80.
So
I'm
we
not
shouldn't
telling
panic
you
yet.
Exactly. I'm not telling you we are going back there. What I'm saying here is that volatility is part of the market when you invest. And people should not be panicking as soon as we have a little spike, you know? So I would say do not change your strategy. If you are positive on equity, as we are actually, it's just fine. It's volatility, it's inherent to the market. Of course, there are some risks, and we know that Greece is actually looked very closely by market participants.
Let's look at Greece a little bit more closely. There is obviously much going on in Europe. Economic data, somewhat positive, in some other countries, much more negative. What's going to happen to Greece?
So, as you mentioned, the environment for the Eurozone is quite positive. So we had actually quantitative easing, very positive, bigger than expected. We have a lower oil price, which is boosting consumption, input cost really cheaper. And we also have the weaker euro, okay? So globally, for the Eurozone, positive. But we have Greece, and Greece will be running out of money June 13th. So they need to find out a way maybe to implement some reform so they will be able to have access to the bailout resources.
Okay, but what has been put together at the moment doesn't sum up to much, does it? Which is one of the main criticisms to the current government. Do you think that the tone and the level of granularity of what they will present will change?
Our scenario is that there is actually, our economists have identified that there is a 60% chance that they will actually find out what we call a semi-stable solution. It means that they will have access to this financing. In order to have 60%,
so
60. So we are more positive, we are more confident, but there are some risks. And there are some risks, yes. But still, they will have access to those 60%. But in order to have access, they may have to trigger election, which may bring some volatility, of course. But we think there will be a kind of a bridge solution, you know, in case there is this election, which eventually may even bring a technical default, okay? But that would be just technical default. The second scenario is that actually they don't find an agreement, and there is a default, but they stay in the euro, okay? This is 20% change. That's our economist figures.
So your economists say give a 60% chance of an agreement being reached.
Yes, that's correct.
What number do you place on Greece staying in the Eurozone?
That's the 60%.
You agree with the economists?
That's yeah, we agree with the economists. And I just would like to mention what Draghi said. I think President Draghi said last week, keep in mind that we are actually really better equipped to tackle this kind of crisis now that we were in the past. Keep in mind that in 2011, Chancellor Angela Merkel was saying, well, Greece maybe should actually clean its house without asking from any help actually for other members. I think things have changed, and now I really trust that Mario Draghi will be able actually to be able to put and to remain, to leave some confidence, you know, in this European system. Also, it will be volatile. There might be some spikes of volatility, but still, we think that it should actually end up quite okay, I would say, okay?
Okay, so you guys are a little bit more optimistic than others on the Greece situation being resolved, and so we are likely going to see more volatility in Europe in the future. So that's a bit of an uncertain scenario, but we shall keep posted and monitor the situation. Thank you very much for your comments.
Thank you.